I think stocks are going down and you need to sell on weakness because this is not going to be another correction, okay? People are used to it, last 30 years, up, correction. No, this is the beginning of a long-term bear market. People think, oh, the economy's strong. You know what, the economy's strong? The Federal Reserve's put like $5 trillion of money printing in the last few years and $5 trillion in the government in fiscal stimulus. It's all stimulus. The economy underlying from 2008 to now is weak. So the problem is that when things finally go down, it's going to be stronger than people think because the economy is so weak. Without this stimulus, we'd have nothing here. They are committed now, after overstimulating for so long, since 2009, they are now forced into tightening when the economy is a lot weaker than they think. They think, oh, the economy's okay. Well, they printed so much money, they've given people so much free money, it looks okay. As soon as this thing falls, it's going to be stronger than people expect. They say that bear market rallies are the strongest rallies because when something finally peaks, people don't believe it at first. So it goes down and then people buy the dips because they've been taught to do that the whole downturn. So the rallies are strong, but at some point these rallies are going to be disappointing. I think this will be it. We've gone down, we'll have a rally here, and if we go down to new lows in the next month or so, which I expect them to say July, people are going to finally say, uh-oh, something's wrong. Something's wrong that we may have really seen a peak in stocks. And I'm saying January 4th and the S&P 500 was the peak. And major markets around the world have been peaking for a whole year from February 2021 to recently. So if a normal peak and correction, oh, everything goes down. No, you don't see markets peak one after the next unless it's a long-term top. My indicators, 𝐃𝐈𝐒𝐂𝐋𝐀, my best leading indicator, says we're already on the verge of a recession now, not 6 months from now. We're about to go into recession already, and this is after $10 trillion, half of our GDP, of stimulus. How could you stimulate that much and go into a recession again? Why? The economy is the weakest it's ever been, as my indicator said 30 years ago. Since the early 80s, the market's only gone up. Yeah, we had big corrections in 87, and 2000, 2002, and 2008 and 9, and it keeps going up. People are now thinking it can only go up. You have to get shocked out of that. You know what the shock is? History shows it, a 40% crash within the first several months. The economy died in 2007, which I predicted 30 years before it happened. Baby boom, greatest boom in history, growing up, spending money predictably at age 46, now 47, and then we would have a downturn from 2008 to 2023 until the millennials came along and drove us up. They are fighting this downturn when the fundamentals are weak. So they are assuming the economy is stronger than it is. The economy is only strong because of their stimulus. We're going towards deflation, and what the Fed is doing here, they're fighting deflation, and they're going to lose that battle. First crash, it's only the first crash of the bigger crash over a couple years, will probably bottom around July, mid-July. So we're in that first crash. There's no soft landing. I will say that there's no soft landing here. The Fed is hoping for that. They don't understand the underlying trends of the economy. They just think if they do the right interest rates, no, there's no soft landing here. We are so overstretched. The biggest bubble in everything, real estate, financial assets, everything, even gold, has been in a bubble. We had the greatest inflation in the 70s, not because of bad government policies or deficit, it's because the baby boom entering the workforce. Now we have the opposite. We have deflationary tendencies as baby boomers die faster than millennials rise in their spending. We've never seen a smaller generation follow a bigger one. We've never seen this before. So that's why they have to stimulate so hard, because the millennials, yes, they're going to start spending, yeah, but the baby boomers will continue to spend less until they die by 2042. I can put a number on anything you want to put. When people spend the most, die, anything. So the trends, even though people say, oh, Harry, the millennials are going to come. The millennials are not anywhere near the size of the generation, the baby boomers. The baby boomers caused the greatest boom in history, which I called in the early to mid 80s, from 1983 to 2007, and ever since. Why have they been stimulating so hard and more and more and more? Because you're fighting a downtrend. Biggest generation in history is dying. Why there's been a succession of tops in major indices, including the US, the small caps, and the NASDAQ around the world over the last year. That is only something that happens at a major long-term top. So I think the market's already topped. January 4th for the S&P 500, and we're heading down, and the Federal Reserve's going to find out that their something for nothing stimulus didn't really work in the end, and people are going to find this out only when things crash. I'm telling you, you can find it out now. If they backpedal, it says they're scared the economy's weak. They cannot backpedal. Now, they can be a little gingerly here, but that's a sign of weakness. So I think this is when they have stimulated things so far that there is no getting back to normal. They will live or die by this, and I think they're going to die by this. It's the everything bubble, so you have to be out of everything. There's only two things to do well in a crash when everything goes down. Stocks, real estate, commodities, everything, including gold in the end. Treasury bonds. The safest long-term bonds, 30-year treasuries from the United States government, will be the safe haven. Is the U.S. government is the United States going to go into recession? Yeah, but we're the best house. We have way less money printing than Europe and way less more than Japan. We're the best house. Our bonds, 10 30-year treasury bonds, will be the safe haven. Gold will not be. And I'm in a conference where everybody thinks gold is going to be the safe haven. Not. It wasn't in 2008. And treasury bonds did go up when everything went down in 2008. Gold is an asset that has bubbled like everything else. All financial, remember I said all financial assets have bubbled. All will crash. Only the treasury bonds, the safest bonds, go up in that scenario, as happened in 2008. Gold went down. Only thing went up in 2008 was treasury. And then I think gold in the next global boom, which will be dominated increasingly by Southeast Asia and India, and they love gold. I think gold could go to 3,000 to 5,000 in that boom, but not in the bust. People think Bitcoin's a safe haven. Bitcoin's the biggest bubble here. New industry. They think gold's the safe haven. No, gold is not the safe haven. I think gold could be 3,000 to 5,000 in the next global boom between 2037 when the millennials peak in spending and 2038 to 40 when the next commodity bubble. Gold is really the king of the commodity bubble. So I think gold could be 3,000 to 5,000 by 2037 to 2040. If it does go down to 900 to 1,000, I think that'll be for gold buyers the buy opportunity of a lifetime. But what would I rather buy? I'd rather buy global stocks, especially India. Gold will never be the standard. It cannot keep up with the global economy. We're in a digital economy now, and Bitcoin could become the new standard for the digital economy in the future. Replace gold in that function. So I think Bitcoin, and I've tracked this versus the dot-coms. I compare the cryptos to the dot-coms in the late 90s. It wasn't just a bubble in tech stocks. It was the dot-coms, Amazon, okay? Amazon was a nothing burger and became the greatest retailer in history. So this is going to crash, and I think Bitcoin could go down to 3,000 to 7,000 and then go to 500,000 to 1 million in the next global boom.